U.S. yields are up about 2 basis points to kickstart the North American session, but the U.S. dollar is lower versus all the major currency pairs, marginally, but still lower. I'll talk about the technicals driving the 3 major currency pairs, the euro versus U.S. dollar, dollar versus yen, and sterling versus U.S. dollar from a technical perspective in this video, so let's get started. Looking at the euro versus U.S. dollar, a clue for the technical perspective was right here when the price declined after breaking above this swing area and failing right through here. The decline that we saw in early or midday trading yesterday came down right down to the 100-hour moving average. It was actually during the early U.S. session. Found support buyers against that level, and that gave the buyers the go-ahead to push to the upside. That upside move stalled right at the 50% retracement of this move to the downside. That level came in at 1.15975, rotated back down into the close and into this swing area in the Asian session until we broke out to the top side and got above the 50% retracement, and that opened the door for further upside momentum. This trend line moving down from this high going back to, well, I guess that's September 24th. The trend line was broken, as was a 61.8% retracement near the same level. But as you can see, that was a brief break, and we started to rotate back to the downside. Currently trading at 1.1616. And above the 50% retracement level, which is close support now. Again, that was resistance in trading yesterday. We're kind of near this high price that we saw from 2 days ago as well, the old high for the week. So the combination of this high 50% retracement, the high from yesterday, is going to be our support level in the euro versus US dollar today. Hold above that level, and we can continue to push to the upside. Move below it could be some disappointment. Let's take a look at the dollar versus yen next. And this currency pair was able to extend above the ceiling level areas right through here around the 154.48 level. That area corresponded with different swing highs right here. This is the ceiling. This is even closer, but these highs right here, a number of different highs right there, broke above it in trading yesterday. We found support not once but twice. We moved high, but we could not get back above the old highs right through here and rotated back to the downside. Like we saw in the euro, we had a break that should have sent the price lower, but we did find early buyers against the 100-hour moving average, which sort of did a good job earlier this week. But the failure to move below the 100-hour moving average and stay below this line keeps the buyers in play. Let's just say that in the short term, they're still more in control. So staying above the 154.477 is going to be a key technical clue for traders. If we do move below it, then be on alert, because a break below the 100 and 200-hour moving average would prove further selling momentum and give the sellers more control, at least in the short term. Finally, let's take a look at the sterling versus US dollar. Again, we'll focus on the hourly chart. And unlike the euro versus US dollar, which found support against that lower moving average, it was a 100-hour moving average. The pound versus US dollar fell below both its moving averages in trading yesterday, falling below the 100 and 200-hour moving averages. But then after coming down and failing to extend momentum below this level at 1.30956, the level corresponded with this low right here, and also this low going back to right here, and the inability to break and stable level and base against this level right here. Get the buyers to go ahead and push higher, and what do? Went right back to the 100-hour moving average into the close yesterday, rotated back down, tried to hold the 200 right here. You can see the battle going on between the buyers and sellers, even right here before breaking to the downside. But that break to the downside could not get back below that old level right here at 1.30956, and like the some of the other currency pairs on the failed break, we saw it short-lived and a move back above the 200-hour moving average right here, gave the buyers a go-ahead to push to the upside. And since then, we've moved back. We've moved above the 100-hour moving average, moved above the 38. An old 38.2% retracement. It's not of this move to the downside, but anyway, it's holding the 100-hour moving average, and perhaps even this swing area right through here gave the buyers a go ahead to push to the upside. So this is going to be, this area is going to be the key support right through here near the 100-hour moving average at 46. Currently trading at 75, and on the top side, The 38.2% retracement of this move to the downside comes in at the 1.31855 level, and that's going to be the next target on the top side to get to and through, in addition to the high price that we saw earlier this week on Monday's trade, which eked just above that level and then rotated back to the downside. So the 85, get above 85 and then get above the high price here at 1.31. It's like 91 level would open the door for further upside momentum for the pound versus US dollar, but we need to get above those levels in order to do that. On the downside, watch the 100-hour moving average. So there you have it. A look at the three major currency pairs to kickstart your day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.